Hello traders, Gary Wagner here. It is 11:50 in Honolulu, 5:50 in New York on Wednesday, Fed Day, the 22nd day of March 2023, and this is the daily report for gold and silver. The Federal Reserve convened this month's FOMC meeting today, raising rates by 0.25% as expected. However, what was unexpected was a pivot, not what traders had hoped for, rate cuts, but rather a pivot to a pause, and that pause is imminent. Currently, it is widely expected that there might be a 0.25% rate hike in May, and then they will pause throughout the rest of the year, but maintain elevated rates.
Good afternoon. Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Sorry, then the question before that was, just give me a...
Curious how you view financial conditions now, and if credit were to tighten enough, if that would prompt a rate cut.
I mentioned with rate cuts, rate cuts are not in our base case, so that's all I have to say. So.
The 0.25% raise by the Federal Reserve definitely moved gold higher, the dollar lower, and silver higher. Gold gained $32.30. This bases the most active April contract. It's currently fixed up 1.66% at $1,973.40. We did enter a long position after sending out a trade alert this morning. We'll cover that in detail when we pull up our charts. The dollar declined by 0.64%. That's about 70 points, and the index is currently fixed at 102.195. Silver gained well over 3% today with the most active contract, and they have moved the contract month, $23.11.5. That is after factoring in a gain today of almost 70 cents per ounce. We did send out a trade alert this morning recommending that you buy April gold at the market. The current price when we sent the trade alert out was $1,956. Traders would have entered that trade between 56 and maybe 58. We also recommended placing a stop at 1933. The reason or rationale behind the stop placement itself was simple. We wanted to place it below these recent lows. Our recommendation is to maintain your current long position and to maintain your current stop. The primary motivation for enacting on our trade alert this morning was based on the fundamental events of what was announced by the Federal Reserve and some technical studies that we have been doing. And when the announcement came out that the Federal Reserve was raising rates by an expected 0.25%, as well as that the pause of rate hikes is imminent, that was what we wanted to see to enter from the long side. This next chart that we are looking at is a 780-minute Japanese Henkin Ashi chart. It also has a Fibonacci retracement, a Fibonacci extension, which we are using to create our current Elliott wave count. We did enter a trade during this period, picked up about $7,000 per contract. So my current belief is that we are in our fifth wave. We have seen, in terms of the counter waves or the fractals behind that, we have completed one, we have completed our correction 2, and we have now entered our third wave. So we'll have a 3, a 4, and then a 5. And my termination for that fifth out of 5 waves is based upon the belief that the fifth wave will be an extended fifth wave, and that would take gold to $2,069. However, this is a shorter term count using half-day charts. through the rest of the week and into next week, I will explore other models that I have using daily and weekly. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.